Per usual, living on the channel is for educational purposes only and is not intended as financial advice. Let's take a look at some legacy charts for Macro Monday, and Bitcoin on an absolute tear today, likely invalidating any concerns I had about head and shoulders. Now, this is part of the issue with relying on legacy for signals. When we start to move and legacy's closed, what do? Do you just wait? And then if you wait, where do you get in? So there's risks no matter how you really look at this. People who are blindly longing, regardless, are certainly going to do great when the move is straight up like this, right? So by negating this head and shoulders, that tells me that the IBIT flows are probably extremely positive today, which I didn't think was going to happen. The GBTC flows are probably minimal, which I didn't think was necessarily going to happen. And this also means that we're probably headed to 82, which is the next pivot. Now, we're probably not going to get there in a straight line, so keep that in mind, but this is very bullish, canceling out what I thought was a clear-cut head and shoulders. Certainly, I wasn't short that, but I was waiting on the long side. This is the 4-hour, and what else do you want as far as a question and answer? Closed above the cloud a few times on the 4-hour. I said to myself, nah, I'll wait for legacy open, see what happens, and well, here we are. Barry not ruining our party today, that's for sure. So ideally, if you're like me and kind of like, it's not like I'm on the sideline here, let's be clear, but as far as a leveraged position, I would definitely want this to chill out a little bit before jumping in. I know I could have fun staying poor. On the daily fractal is also basically at that head and shoulders or right shoulder. So by closing above that also says, yeah, get back in. Again, it doesn't make me comfortable. It doesn't have to make me comfortable. The chart doesn't care who I am or what the cloud is. If we fail at the all-time high for whatever reason, this could form all sorts of bearish chart patterns that people are going to start calling out. But this is unquestionably bullish. Something else worth noting here is that MSTR is also up 22% on the day. And if the long BTC short MSTR pair trade people were still alive and kicking, we probably wouldn't see BTC up as much as it is on the day because they'd be closing their BTC leg and longing the MSTR leg, right, covering the short. So those people are probably gone, even though MSTR still has clearly an active short squeeze. I'll get to that in a second, but we look very strong on the daily. That's undeniable. And what also helped us today, we had a bearish move in the DXY a little bit, right? It doesn't take much. This is why the amplification on the risk side is so important. We just need DXY to not moon and we'll be okay, right? So if DXY chops or goes sideways for another 2 years, that's ideal for Bitcoin. If it goes down, great. But what we don't want to see is continuous higher highs, for sure. As far as flows this week from James, like I mentioned yesterday, outflows were a record for the week, thanks to GBTC. And what my guess is, and kind of what he's hinting at here, I think, is people just sort of waiting to see what Powell's going to say. So maybe now that the coast is clear, we are seeing inflows today. IBIT could come out with an $800 million number or something. GBTC outflows probably small, just based on price, right? And if we go by asset, BTC out clearly greater than everything else, even some out of short Bitcoin. And the rest of the stuff kind of doesn't matter. Bunch out of Ethereum, most of this coming out from the United States, which makes sense. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. On the day, Bitcoin has, on Kraken at least, considerable volume, which is always a good sign. And for the most part, you can sort this by Bitcoin denominated stuff. But my guess is here, for the most part, we are beating the pants off of anything listed on Kraken on the Bitcoin side. A few things, Flow doing well, Sol slightly well, but Filecoin up just barely. Is this stuff individually enough to convince most people to rotate out of the lower risk into the higher risky alts? When we're talking like these kind of numbers, I think this is what, Avagachi or something. Yeah. When you're talking these kind of numbers consistently, then you're talking, okay, that's a position we're taking, but that is not the case whatsoever. Most of the time for alts, right? SNX doing well. Some DeFi stuff waking up. Ocean I'd mentioned last week. This thing, for whatever reason, continues to look very bullish against Bitcoin. Let's just look at it real quick. Definitely worth watching if you are looking for a trade worth taking, in my opinion. NFA, not financial advice, but chart pattern here looks very strong against Bitcoin. As far as the economic calendar for the week, a bunch of Fed speak, Bostic, Goolsby, that was already today. Price index coming. I saw this bogus chart today talking about the median sales price of a house crashing, plummeting, right? From city to city, it is extremely different. So you really can compare, yes, we have a number for the United States. Awesome. But realistically, can you compare Austin to the middle of Nebraska? I don't know, maybe, right? But it's a different market. We have Waller, consumer confidence, GDP, kind of a bunch of nothing stuff, in my opinion. Obviously, it's all important, but I think PCE is going to be the big number for the week to pay attention to. And then if Powell on Friday speaks and walks back any of his dovishness, which he was super turbo dovish last week, basically saying the two inflation prints that were hot, no big deal. Yeah, unemployment's up, but we'll continue to monitor it. Yeah, we're going to have QT taper. Okay. Market said, great, fine. Let's keep on keeping on. And risk market's doing excellent. So if he walks any of that back on Friday, then markets will probably get pretty angry at that. Just something to pay attention to, maybe in the periphery. As far as GDP goes quickly, we look fine on the estimates, So again, the recessionista people are going to be waiting continuously here for a recession that just refuses to come. And many other people have said this in many different ways, but on the higher end, people with assets, people earning interest, people with a significant income, they're doing more than okay, right? They're doing more than okay. It's the people below the midpoint that are paying the interest, are not having wages keeping up with inflation. Those people are in trouble, right? But as far as GDP is concerned, we look okay. Truflation has wavered a little bit in and around this 2% level. They do adjust this with inputs every now and again, which is why it looks slightly different on occasion. So keep that in mind. And the biggest difference between truflation and CPI is just the percentage in the basket. What's what, right? OER versus live housing data. It's going to be different. So if Powell was using something like truflation, then yes, he would say probably we'd be okay to cut. If Powell's looking at markets, he's saying, why bother, right? I should be hiking. I shouldn't be cutting. But the next issue is going to be unemployment for sure. And the latest round of FUD is not just the individual state unemployment levels, okay? But we are now digging deep into the California individual county unemployment levels, which are starting to tick up above 4%. So will that matter eventually? Probably. But funny is the wrong word, but it's interesting how deep the doomers have to dig to find something that looks awful, right? We keep moving the goalposts or getting closer to the goalposts artificially and saying, oh, these few counties in California look terrible, or these 16 states or whatever, right? And that's been the narrative for the past, 2 years now? And it just hasn't mattered. It just hasn't mattered. Looking at the CPI estimates for this month, it is up again, right? So will that disturb the markets on the next CPI print? What's Powell going to say? Okay, that's 3 months now. It's a full quarter of rising CPI. Is that going to be a problem? Is the PCE number on Friday going to be a problem? It feels like to me he's sort of hand-waving these data points that previously seemed pretty important to the narrative, right? Almost as if it doesn't actually matter what the numbers are, and you can just use whatever justification you want for whatever targets you want. It seems like they're throwing away the 2% inflation target as well, at least in the near term, based on their numbers, right? Very interesting. As far as the energy input in inflation, with rising oil, rising gas, this is AAA numbers in the United States on average, year-over-year numbers are rising again. So we will not see help from energy costs on the gas front in CPI. Seasonally here, you can kind of see, I would argue, I don't know if this is correct, but I would argue into the summer months, we've seen a seasonal uplift. So that may contribute to CPI pretty considerably throughout the next quarter, which again, are risk markets going to care? Is Powell going to care? What's the Fed going to do to that, right? And you know they're looking at this and they see this coming. So it's just surprising, again, to hear Powell saying what he's saying. As far as reverse repo, we are down to 474 billion, up slightly from the lows. And this may just continue to flatline out. Powell, again, specifically mentioning this, mentioning the QT taper, mentioning bank reserves, things that people have been talking about for months now. And this may just be close to the natural bottom. Some percentage of this is just going to stay in reverse repo indefinitely. And that will hurt the liquidity picture. And that may mean shifting issuance to the long end versus the short end. Something else to watch with the next QRA, whenever that is, quarterly refunding announcement. On the banking side, things seem to be okay so far. But I think the deeper we get into Q2, we'll start to find out who's having liquidity issues and who isn't on the smaller bank side. As far as the CME probabilities, no hike next meeting is thus far priced in. After that, we start getting closer to the election. Are we going to get 225s? Are we going to get 125? Are we going to get 150? They're probably not going to spring a 50 on us. So between now and the election, you'd think we'd see one cut. I think it's going to get harder to justify additional cuts beyond that if CPI keeps rising, which it looks like it's going to, right? And when do the markets start to care, right? When do risk markets start to care? So far, no cuts have been great. So I've said this weeks and weeks ago. The market thinks it wants a cut, but a cut would be historically maybe not so great. So far, so good at the current 5.25 plus level we're at. As far as yields are concerned, week over week, yields are down across the board, across all of the curve. We're still heavily inverted, a record number of days at this point. And I still don't understand why people would fool around in the long end when you can get what you're getting on the short end. And the Fed doesn't necessarily sound like they are in a rush to cut, right? Maybe when that changes, the yield curve will change. But in the moment, it seems silly to go out to the 10-year or the 5-year versus holding something in the short term, to me. Looking at the yield curve inversion, again, this doesn't look like any hurry of uninverting at all. And you can see on the bottom here, unemployment slowly ticking up, slowly ticking up. So far, the inversion has not mattered. We'll see if the uninversion matters. I suspect it will. But again, it's party on until that happens. You can't just say, oh man, the sky is falling, the end is near. And it's been over a year, okay? There are a lot of people who've remained on the sidelines for over a year and just missed this entire rally. It kind of boggles the mind. The other problem with the short end and the long end and all the debt we're just issuing so much of it. And it's just a runaway freight train. And in some ways, it's sad how correct the Bitcoiners, the libertarians, the balanced budget people are going to be in the end, because we've seen this movie before. It's very hard to rein this in once this gets going. And this is the other piece where the federal interest payments are just out of control. They're out of control. How are we going to rein this in? You would think, Lynn Alden has brought this up, you would think that with rates as high as they are, that would sort of prevent wartime spending, but it has not. It hasn't reined in anything. If anything, we're spending more than we ever have. And therefore, we're paying more in interest as a country than we ever have. Just an astronomical amount, $1 trillion in interest payments. How do we rein this in? As a Bitcoiner, I want to be able to live in the country, right? I don't want to sound apocalyptic here, but things do seem to be getting a little loose. Foreign holdings of U.S. debt also falling since 2014. So who's buying our debt, right? Are we going to buy it? Is it going to be forced into 401ks? Is that the next step? Is the Fed going to have to step in? Is it going to be Bank of Japan 2.0? We're just issuing so much, it's hard for everybody globally to absorb what we're doing. And it's not like, again, it's not like funding is coming down. This is the $1.2 trillion funding bill, $825 billion for military spending, and it just never ends, right? Tons of geopolitical issues. In the Middle East, we're sort of supporting both sides. So what are we even doing, right? Like, what are we even doing? And that brings me back to TLT. TLT looks like it could be bottoming here. It looks like it could be ready for a move through the cloud. But based on all the fundamental evidence, I can't imagine ever wanting to touch TLT. We're just issuing too much debt. End of story. And TLT relative to Bitcoin, all-time low. I prefer looking at charts like this, it's just, die, TLT, die type thing. You can always flip this BTC over TLT, which would be an all-time high. But I'll look at a lot of charts today relative to BTC because the question is going to continuously be for me, should I buy X or should I buy Bitcoin? And if all the charts look like this, which most of them do, what's the point, right? Why buy anything else? At least right now, in the moment, until this trend reverses, there really just hasn't been a reason. Let's look at the SPY, SPX, right? Almost at all-time lows relative to Bitcoin. Lost considerable value against Bitcoin in 2023. And I've said this before, but if you're a fund manager looking for outperformance, this is one place you can do it. And now that ETFs are connected to the markets, it's going to be easier than ever to access this for those funds, should they choose to do so. QQQ, also very close to all-time lows relative to Bitcoin. Both of these on the USD pair. Okay, right? Just treating these like altcoins, but because that's what's going on over here, right? Look at Bitcoin dominance relative to the world, and it's pretty clear what's going on. Channel looks fine. It looks a little tired up here. It doesn't need to go up forever. It doesn't need to hit an all-time high every day. This can easily just consolidate. It doesn't need to retrace, right? But as I said yesterday, this thick cloud is always a worrisome sign, because if this does roll over, if this then that, then it points to a move below 470 from 505. So that's definitely something to watch for throughout the year here. And once this does roll over, if it does, you'll get a bearish to get across, you'll get price in the cloud, right? There's going to be plenty of warning signs. So that isn't to say, oh man, close everything here, short it all. No, that's not what I'm saying. I'm saying it's bullish until proven otherwise, right? Same thing with QQQ, bullish until proven otherwise. Watch for the move maybe later in the year from around 435 to 395 potentially, but so far so good on that front. IWM, this is a new all-time low for IWM relative to Bitcoin. This is the low caps, Russell 2000. On the USD pair, it looks okay. Doesn't look terrible. Certainly in no hurry to continue its breakout. A lot of this is MSTR and SMCI as far as what's pushing this thing up. Most of the Russell 2000 is just junk. So of course Bitcoin is crushing it, right? NVIDIA is one of the few. If we go out again to the most extreme, NVIDIA has gained over the past couple of years against Bitcoin. On the weekly, NVIDIA has been green for many, many weeks now. You can't short this. Does it look toppy? Does it look tired? Sure, I don't know, maybe. But so far, so good there. And against Bitcoin, you'd think at some point, if not already, some of this NVIDIA wealth effect is rolling into other stuff, including Bitcoin. As far as a natural range, I wouldn't suspect it gets anywhere close to 03 before returning back to the midpoint here. But we did hit all-time lows in 2021 against Bitcoin on NVIDIA. Google, the best looking of the Mag 7, easily continues to look like a cup and handle to me. Looks great. Against Bitcoin, it's at an all-time low. Does this look bullish to you? Not really. Could this be bottomed or in the process of bottoming? Possibly. But it certainly doesn't look strong against Bitcoin. Tesla, the worst in the Mag 7, probably out of the Mag 7 at this point, continues to look bearish to me on high time frames. The moment it broke out of the weekly cloud, it was kind of over for Tesla. There are a lot of people who are still buying this thing all the way down. Here's Tesla against Bitcoin, okay? Very clear breakdown of whatever channel this may have been. And on the weekly, this could be a bearish flag, even on lower time frames. So this isn't a buy until it's back above the weekly cloud, which could take another year easily based on trend metrics. And this thing does not look happy against Bitcoin, right? PayPal, to me, just running through a few of these individual names that look better than most. This looks like it may finally have a shot. Falling wedge, inverted head and shoulders in the 3-day cloud for the first time since 2021. I think it's worth taking a stab, right? Now against Bitcoin, it doesn't look so hot. You don't even have a bull div here yet. So maybe I'm sniping the bottom against Bitcoin, because again, the question for me is, do I buy an ETF or do I buy any of this other stuff, right? And it has to look pretty compelling for me to want to think about buying anything that isn't Bitcoin here. So this looks okay, right? I wouldn't buy this if it were any other chart, but maybe it's the bottom here. Square on the USD pair looks great. Weekly cloud, top of range, crypto adjacent. They sell Bitcoin and hardware wallets. They should do fine post-halving. They should do fine if rates come down. So I like higher highs here against Bitcoin. Maybe this is a falling wedge. Maybe there's a bull div here. right? But again, you're basically sitting at all-time lows. So for any of this stuff, I wouldn't want to be heavier in it than Bitcoin, which I'm not, right? But I would do this exercise for yourself, right? Anything you're thinking about, real estate, whatever else, if it's got a chart, plot it against Bitcoin and see what's happened. HUD continues to look very strong on the weekly, working its way through the cloud. I like 46, okay? Is it crazy? Probably, but I think it's a great target. If trading continues to kick off against Bitcoin, it's kind of flat, definitely at lows. Doesn't look horrible, it doesn't look great. Coin continues its moonshot. Again, if trading is back, if volumes are up, if all the crypto stuff is up, if base and layer 2s and VC and right, the whole shebang, yeah, coin should do well. Is Coinbase going to get angry? The stock win? The ETH ETF probably gets denied, probably, but it'll eventually get approved. They will be the custodian. They will be the staking provider, right? So this continues to look very good. On the pitchfork, on the cloud, it's undeniable. This thing looks really good. Coinbase against Bitcoin even looks decently okay, right? It's at the top of the range. It's held this diagonal. It looks pretty good. It looks pretty good. So again, this is something else that I think is worth a consideration in the portfolio. MSTR. This one, I continue to not understand what's going on here. Yeah, it's a short squeeze. Okay. Yeah, the people who can't access Bitcoin ETFs are trading MSTR. Okay. Maybe the short squeeze peters out eventually. And the real issue is people keep shorting it. So of course it keeps going higher. Premium to NAV is still at a 2x. Sailor's probably going to come out this week or the next and say, I'm going to issue, or I'm going to buy more debt to buy more BTC, right? Looks parabolic, looks insane, but people keep shorting it. So it's going up, right? MSTR against BTC, this was the trade that blew up in a lot of people's faces, continues to go higher. And two things maybe to watch within the next couple months. Do we go to 0.4 on the ratio, which was the previous high in 2019? The other thing to watch is premium to NAV. And then this side little piece here about other markets unlocking access to Bitcoin directly, that may help shrink the premium to NAV. It may bring people back into Bitcoin products versus some leveraged derivative, right, that they can access. But this looks very good against Bitcoin. Kind of an uncharted multi-year territory up here in the 03, 04 zone. As far as the miners, they've looked worse. They look okay, right? It's still chopping. I'm anti-miner. I'm not Mike Alfred. Okay, let's just get that out of the way. So I'm not turbo bullish on most of the names as far as their survival post-halving. I like this better above 20. I think it's fine here. You know, it's above the cloud, held the lows. It's still in this mega rising wedge type thing, but it looks okay. There's an ultra low time frame, inverted head and shoulders playing out there. Against Bitcoin, it did get to a new all-time low. WGMI is the miner ETF, by the way, in case you're unaware. Bounced quite a bit. I guess something to watch here would be if we get anywhere close to the upper boundaries of this, you know, then you'd rotate back into something like Bitcoin as a trade idea, but that probably takes a significant amount of time to happen. So the bottom for WGMI, at least in the moment, against Bitcoin may be in, based on that chart. ETHE looks, again, okay. It survived the Kijun bounce, which is probably hard to see, but the problem I have here is the discount continuing to increase as the market's sort of saying, yeah, you're probably right, SEC, we're probably not going to approve this anytime super soon. So I think, again, like as a trade idea, I'm always looking for worst case, best case scenario, most likely scenario. If come May that all of the ETFs get denied and the ETHE discount blows out to like 40%, okay, then I think that's a great buy, right? Regardless of kind of what price looks like. But here, before the denial, it's probably too early as a trade idea. And again, let's put it against Bitcoin, right? What does it look like? ETHGBTC. It looks pretty awful, right? This is a new multi-year low on the weekly, and it just does not look strong, right? I would much rather catch this on a chart pattern, on an upswing, on something. But this, to me, just looks like a bottomless pit against Bitcoin in the moment, which makes sense. Bitcoin is ETFs. ETHE is not a full-fledged ETF yet. It's a closed-end fund with a discount. Then lastly here, oil against Bitcoin, also at all-time lows. So it is just a very hard argument to buy anything other than Bitcoin. It just is, you know. Look, I'm a maxi. Sorry. Show me the data and I'll change my mind. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.